Hello and welcome. You tune in to Rush Hour with me, Ankita Saxena, and with me is Ankur Mishra. In the next half an hour, we'll take you through what's happened in the Indian markets and what are the global cues to watch out for. But first up, we are in the thick of earnings season and a big cap good major L&T that has reported its quarter two numbers, Ankur.
Yes, and L&T has reported a mixed set of numbers. For the second quarter, the profit after tax rose over 15% to 3,926 crore. And if you compare with last year, it is beating the estimates as per ET Now poll. Revenue also grew 10% compared to last year to 67,984 crore, but failed to meet the street expectations, whereby the expectation was that the top line will be better. EBITDA too saw a growth of 7% at 6,806 crore, which is lower than what analysts were penciling in. Talking about segments, infra business growth remained flat at 32,149 crore, while energy business saw solid growth of over 47% to 13,090 crore compared to last year. Total order inflow for the quarter stood at 1.16 lakh crore.
All right, so those are the numbers for L&T. In fact, if we look at the scorecard, we do see a bit of a miss that's coming in on the revenue and the profit front. Even EBITDA is a slight miss, but margins, however, are falling in line with what ET Now was penciling in. But let's go across to our sector analyst Kanishka, who's now joining us on the phone line with the fine print of the earnings. Kanishka, take us through what do the results say, because we do see a slight bit of a miss coming in there, but the order book remains strong for L&T.
Absolutely. So like you said, L&T has reported a mixed set of numbers for the second quarter of FY26. Revenue and EBITDA, they have come in below estimates. However, profit after tax, that did beat expectations by quite a bit. Consolidated revenue, 10% year-on-year growth is what we have seen at that 67,984 crore level. EBITDA has grown about 7% to that 6,806 crore level. That's keeping margins largely steady at 10%. This compares to 10.3% in the corresponding quarter. However, net profit, that has stood at 3,926 crore. That's up nearly 16%, driven by strong execution and higher other income. Operations, they have contributed 56% to the total revenue. Order inflows, they of course have remained very steady, very robust. It's coming at 1.16 lakh crore rupees. That's up nearly 40% on a year-on-year basis. And nearly two-thirds of this is coming from overseas, that is international orders. Now, L&T's total order book now with this order inflow stands at 6.67 lakh crore rupees. That's up 9% on a sequential basis. In fact, the management has highlighted EPC order momentum across sectors, healthy capex trends in India as well as the Middle East. In its con call, some very important commentary coming in. Firstly, let's talk about FY26 guidance. Now, L&T has reaffirmed a 15% revenue growth target, while margins at 8.5%, they remain a work in progress. Now, the company expects momentum to pick up in the second half as infra activity picks up. Meanwhile, it also says that the company is looking positioned to exceed the full year 10% guidance of order inflows. So yes, it could exceed that 10% guidance for order inflows. In fact, a very important commentary on the capex front as well. It says that it is witnessing initial revival of private sector capex alongside increase in infra investments, and it expects this infra investment trend to continue in the third and fourth quarter as well. Lastly, they expect the volume of defense business to grow significantly over the next few years, given the government's Atmanirbhar push. So very important commentary coming in there. So yes, a steady quarter yet again from L&T, though a slight bit of miss as far as revenue and EBITDA are concerned.
You were talking about the guidance which is given by the company. Now, as far as the margins are concerned, that has declined this quarter. But for the next financial year and as far as the current fiscal year, what is company saying? Do you think this 10% will be maintained? That is what the company believes, or 8% plus is the target?
That's right. So the company has given a margin target of 8.5%. They say that overall, this is what they are targeting right now, and it remains a work in progress. So we need to see at the end, because quarter four, That's the quarter where most of the orders will, translate into revenues. That's the quarter when most of the revenues are usually the highest. For example, like the company did mention in the third quarter, it's a sequentially weak quarter as far as the infra segment is concerned due to longer monsoons. So yes, there is going to be some impact, but 8.5 is the company has given a very conservative guidance. That's the word that was discussed in the con call as well. But they're saying that they could exceed these level. It remains a work in progress, so we need to wait out and see by the FY26 end to see whether or not they are able to exceed these margins level. For now, in the quarter gone by, that is Q2, the margins have come in at the 10% level. This compares to a 10.3% level in the previous quarter of the corresponding year, that is FY25. But yeah, that's how the margins are shaping up. But in fact, in the previous quarters, also in Q1, the margins were at 9.9%, Q4 11%, 9.6%. So it looks like they may be able to, exceed these 8.5% guidance level. But yes, so far they have maintained that 8.5% is the guidance that they want to give. But like they said, with the order and revenue, they are on track. In fact, they may exceed that. So that might be the case for
Right.
margin as well. Let's wait out and watch.
Right, Kanishka, thank you so much for joining us with all the number crunching. But now we're joined by Gaurang Shah, who's the Senior Vice President, Geojit Investments, who's joining us to weigh in on the numbers. Hi, Gaurang. Good evening. Thank you so much for joining us. We've just seen the numbers for L&T. A bit of a miss there that's coming in as far as the revenue is concerned, and also the EBITDA. Even though the order book is strong, and if you look at the management commentary, also strong EPC order wins coming in across segments, and even the execution is strong despite global headwinds. What could have led to that miss coming in on the revenue front? And they've also given a clear guidance for margin as well. Given the order wins and the execution that's strong, will that be sustainable?
Thank you so much for having me on the show. Good evening to all of you all. So I think margins a slight miss. I don't think one needs to really take it or dig deep into it. One of the things as far as cap goods engineering and a company like L&T is concerned, we need to have a longish time horizon. We can't compare quarter on quarter, 6 months, 6 months. Having said that, since we are discussing the stock L&T, I'll give you a small disclosure that we do have a positive coverage on L&T from a long-term point of view. My company, Geojit, our company, Geojit, or myself, we don't have any investments, no financial interest, no conflict of interest, but we give recommendations to our clients on similar lines. They might have their investment in this. Now, coming on L&T, I think it's a diversified company established almost about 7, 8 decades back in India. And the kind of order book that they're speaking about, and more importantly, having a strong order book is something, and having the capability, experience, expertise, manpower, equipment to execute that order book is totally reliable as far as L&T is concerned. I will not read too much into a small revenue miss or, the margin or margins coming in line. I think from a long-term point of view, there is a lot that can improve going forward from here on. And you're talking about the headwinds as far as the international markets are concerned, but the order flows have not slowed down. And now with resolution of geopolitical situation at the international level, I think there should be much better times for L&T as we go into the next couple of quarters.
Right. Gaurang, you mentioned about next few quarters and particularly about this quarter, the segment-wise comparison, if we take infra segment has not performed well, but if you talk about energy segment, that has risen to almost 47%. I want to understand from you, due to seasonality as far as the orders are concerned, do you think infra segment will also pick up in the second half?
I'm very confident about it. Look, infrastructure, there is a lot that you need in terms of approvals, government clearance, etc., etc. So maybe in 1 or 2 places you might fall short because of, approvals not coming through, and maybe because of a seasonality factor like you rightly mentioned. But the fact of the matter is that if India has to grow from the current GDP rate of about 6.4 or 6.5 to maybe a 7% and beyond that level, then government needs to spend on infrastructure, creating new infrastructure, at the same time modernizing the current infrastructure that we have in the country. And I think L&T is the answer to all kind of infrastructure problems in case if we have any, whether it is a complex turnkey project or whether it is high technology or whether it is any kind of hydrocarbon, etc., etc. My sense is that this small miss should be taken care. possibly not in the third or the fourth quarter, but over the next financial year, I'm sure there will be better numbers that they will deliver.
Right, Gaurang, finally, before we let you go, I know, this is a temporary blip perhaps because fundamentally L&T, I know you have been bullish on this counter from the cap goods space. But tomorrow, how do you feel the investors perhaps will react to this? And also talk to us about the fact that, for a cap good company, it's the order wins, the execution and all of that, all of that is in place as far as that is concerned. But what can be the potential headwinds going forward for L&T in the coming quarters?
So headwinds could be in terms of any kind of unpleasant geopolitical situation where again you will see a slow order as far as the international market. But, looking at the current order book segment-wise, I think they are well placed in terms of delivering better numbers than what they have done right now. And in terms of stock call, like I gave a disclosure, our fundamental team has a positive view on L&T for a pretty long period of time. And I think with these numbers, possibly we'll just dissect the numbers, break it down, and whether it is credible enough to give a target revision upwards is something that we come to know in a day or two.
Thanks, Gaurang, for joining in with all the details on L&T numbers. We'll get back with more details on the results.